It's another time to do 55 minutes of business. Current and relevant business talks. That's what we do here on Business Morning. Good morning, everyone, and welcome to the program. I'm Ini John Mekwa. We start from the global space where oil prices eased on Tuesday after rising almost 2% in the previous session as investors are assessing new development on U.S. tariffs and a higher than expected OPEC Plus output hike for August. That happened over the weekend. Now, Brent futures dipped 0.3%, $69.36 a barrel. U.S. West Texas Intermediate crude also went down 0.4% to $64.66 a barrel. U.S. President Donald Trump has begun telling trade partners, which include major suppliers like South Korea and Japan, as well as smaller U.S. exporters like Serbia and Thailand and Tunisia, that sharply higher U.S. tariffs will start from August 1, marking a new phase in the trade war he launched earlier this year. Trump's tariffs have prompted uncertainty across the market and concerns that could have a negative effect on global economy and consequently on oil demand. Regarding supplies, on Saturday, the Organization of Petroleum Exporting Countries and its allies, as OPEC Plus, agreed to raise production by 548,000 barrels per day in August, exceeding the 411,000 per barrels hike that they had made for prior 3 months. The decision removes nearly 2.2 million barrels of voluntary cuts, and analysts at Goldman Sachs expect OPEC Plus to announce the final 550,000 barrels per day increase for September at the next meeting, which is supposed to hold August the 3rd. Here in Nigeria, the Debt Management Office has opened the July edition of its monthly federal government bond offer. The 5-day subscription window, which opened yesterday, offers investors attractive interest rates on their investments. And this month's bond includes two options: a 2-year savings bond which matures July 16, 2027 with an interest rate of 15.76%, and a 3-year bond maturing July 16, 2028, and that has 16.762% interest rate. The Central Bank of Nigeria has directed banks to submit a capital restoration plan as part of regulatory efforts to support the exit from the forbearance regime. In a circular signed by the CBN Director of Banking Suspension, Olubukola Akinwumi, it was published on the website. The Apex Bank said that the capital restoration plan would complement its other measures, which include termination of forbearance exposure and single obligor limit waivers, suspension of payment of dividends, bonuses, and investment in foreign subsidiaries for affected banks. According to CBN, to complement the above measures and ensure forward-looking capital planning, all affected banks are required to prepare and submit a comprehensive capital restoration plan to the CBN on or before 10 working days from the end of the quarter, with effect from June 30, 2025. And now the Brics meeting. Almost all 10 members of Brics, which is a bloc of emerging world economies, are currently engaged in sensitive trade talks with the U.S. and are trying to assert their positions without provoking further tensions. President Bola Tinubu is there, but not as a member of Brics. However, the Brics statement did not take aim at unilateral tariff and non-tariff barriers that skew global trade and flout WTO regulations, though indirect critique of Trump's protectionism agenda before a deadline on Wednesday for new U.S. tariffs to potentially kick in. Now, Trump has responded to Brics' declaration within hours, warning on his social media platform, that's Truth Social, that countries siding with what he termed anti-American policies would face added tariffs. It says any country aligning themselves with the anti-American policies of Brics will be charged with an additional 10% tariff, and there will be no exceptions to this policy. And of course, at Brics, at the summit, a whole lot is being discussed. And President of South Africa, President Cyril Ramaphosa, puts it in a short word for us.
We commend the important work undertaken to review the strategy for Brics Economic Partnership 2030. In view of the current geopolitical challenges and trade uncertainties, the strengthening of trade and investment ties between Brics countries is therefore absolutely essential. The fourth industrial revolution has brought about a new era in the social and economic life of all countries and all people. It has demanded that countries develop new policies and strategies to enable an inclusive, whole of society approach. Global institutions and inclusive participation are needed now more than ever. And it is in this regard that the reports that we've just received from the Business Council, from the Women's Business Council, as well as the Civil Society Council, are very important.
All right, as I said earlier, President Bola Tinubu is there. He was invited by Brazilian president and he voices Nigeria's support for BRICS push towards inclusive, just and collective global development, moves that, well, some say may incur the anger of President Donald Trump. Also part of the conversation there at Brics, they're preparing a consolidated trade proposal centered on the African Continental Free Trade Area Secretariat. And the African Union is taking a united stand in response to Trump's preference for bilateral trade. So these are the issues coming up as BRICS Summit draws to a close. It started over the weekend, and the new threats are coming from President Donald Trump. But now let's talk to the Managing Director of Optimus by Afri-Investments, Dr. Ayodeji Ebo, to find out his findings and thoughts on all of this. Dr. Ebo, good morning and welcome to the program.
Good morning. Thanks for having me.
Great. So, I mean, BRICS did not start today, but it's always had its aim, which is, among other things, to wean the world or members off the dependence on the dollar. That's just one of it, but also to build a financial architecture that can take care of its needs, and they don't need to look, the way of the United States. But perhaps you can share with us what you think about this. Is it realistic in the world of today, especially in the world of Trump?
Okay, yes, thanks. And with your last phrase, the world of Trump, now most countries have begun to see that there is a need to reduce dependency on the US or on dollar because of a lot of the uncertainty that is going on and the policy inconsistency that we're seeing. So you would see when you look at the countries within the BRICS, Brazil, China, India, Russia, and South Africa. And I think there's some other, Iran, in recent times, Iran, I think the other 5 countries that just joined. The idea is to see how they can reposition those countries to reduce dependence on the US. But I would say that it's not going to be immediate, or it's not going to have an immediate impact, but it's going to be gradual. Because when you look at the current data, when the global reserves, about 60% are kept in dollars across, and you look at trade invoicing, it's estimated to around 80%. Most trades are still done in dollars, but there's a need to have like an alternative. So we saw some countries when the Russia-Ukraine war started, a lot of countries that were dependent on Russia now they had to begin to look at what are the alternatives for them in terms of power, gas, and the like. So what I think is happening is that the position, the size of the Brics, when you look at their trades, is still relatively small. Or even you compare it to the World Bank, there's this new development bank that was set up and trying to set up infrastructure fund of about $30 billion. That is still small in the scheme of things compared to what the World Bank, the IMF have. So say it's still going to continue to push to try, but I don't see it having any major impact on the US or reducing the dependence for now.
Because they've also talked about, members using domestic currency to trade instead of going through the dollar and all of that. You don't see that as something that can happen at this time?
No, I think that it would definitely be an improvement. So we're already seeing those trade ties. So you see Russia, China, given what is Donald Trump is doing around the tariff war. So you would see those alliances come up where most of the Chinese economy would also be open to see how they can partner with the Africans or members of the Brics, such that it can strengthen its own currency. You see, for China, the yuan, Russia, the ruble, they've been able to see how they want to, when you are trying to pay them, they insisted during the thick of the war then that even to pay in gas must be paid in their currency and not in the US currency. So those are some of the strategy that they would adopt, but I see that it's still not going to have as much impact. It's over time because the US too is also mindful. We saw when the trade or the tariff, if I put it that the tariff then was introduced, when President Donald Trump saw the likely impact even on some of the companies, that he had to first of all relax it, and over time is also trying to look at it on a one-on-one basis. So they also need the world to survive. So it's really going to be a mutual discussion that would ensure that trades are not secluded or ring-fenced out of other countries.
So you don't think this extra 10% tariff threat that he's giving to any association or associates with Brics, you don't think he will push through?
I feel he will be very careful. We saw how he was able to maybe mediate and find like a middle ground even with China, because when he saw their importance, yes, it looked at it was really very tough at the time based on the communication or based on the news. But over time, there was a dialogue, there was a discussion. So I don't see him just slamming just 10% across, because you have China, you have Iran, you have India. These are also major economies that if you decide to slam that and they decide not to also patronize you, it would also impact on the companies that export to some of these countries. So I feel that, yes, we'll be hearing a lot of the threats. And if you understand Donald Trump, most times you also don't react immediately based on some of the statements that he makes at times. But you also need to just look at what are your own strengths and have your scenario planning in case if actually he goes ahead with some of his threats or plans.
And then we have the Nigeria scenario. So we know President Tinubu is there. He was invited. He's a visitor. Nigeria is not yet a member of Brics. Where does that put us as a country amidst President Tinubu says, of course, everybody's supporting AFCFTA at this time. They want AU to come as one front, as Africa, in the midst of negotiations, whether it's with President Trump or any other, or even with Brics. Africa is coming as one front. At least that's what they're planning to do. So where is Nigeria's position, and where should Nigeria be amidst all of it?
Yeah, so I think that first of all, Alika, our presence will show that we are not biased. We also support not just the Western allies, we also support the non-Western allies. And the opportunity that I feel that may also help us is also diversification to access of funds. Like the new development bank that's been set up, the opportunity that also presents beyond just relying on the IMF and the World Bank, it may also come with less maybe stringent conditions to access some of those funds. Yes, in life, there's always the risk that may also come with some decisions. The risk is that maybe Trump, for instance, may see that Nigeria, you're trying to align with some of those he doesn't actually align with, and slam a tariff on Nigeria. But the truth is that we may also find alternative countries to supply also some of those items. And you would see that some countries may even come forward to come up, like China, India, that if they are also able to produce some of the items that we also need from them. So I think by and large, that is also good to be seen that we align with all, because we are still emerging, we are still developing, and we're taking a side right now when it won't also be seen or appropriate for us to be seen as taking a side.
Jabo, thank you so much for sharing your perspective with us this morning. Managing Director of Optimus by Afrinvest. Thank you, sir.
Always my pleasure. Thank you.
All right, we're still staying on the BRICS summit and what it does mean for Nigeria, or what Nigeria should be doing at this time. Dr. Ebode just talked about Nigeria trying to balance it so we're not seen to just be hobnobbing with the Western partners, but also the non-Western partners. Let's find out what Chief Consultant of B. Adedipe Associates Limited, Dr. Biodo Adedipe, let's find out his own perspective on this. Dr. Adedipe, good morning and welcome to the program.
Good morning, Dini. I'm happy to be with you this morning.
Good to have you, sir. So, is it possible for Nigeria and other African countries to win itself off the dollar?
Very good question. Now, I will put it in context that where we are today is the outcome of history. And it's always good to put things in that perspective. Brics evolved 25 years ago, and that was based on an econometric projection of what the world economy, the global economy will look like in the first 50 years of this new millennium. So the idea was that by year 2050, the BRICS economies would have become so important that it cannot be ignored. So the question now is, over that course of time, in fact, the first 4 years of that period, 2001 to 2004, we saw the stock markets of the original BRICS, which were just 4. That was before South Africa was brought in. Now, their stock markets grew by between 240% and about over 600, about 623% over that period of 4 years. So the interest now was that, hey, if what Goldman Sachs projected in his econometric model played out this way with the 4 countries, how would this evolve by the time we get to year 2050? So now, on the back of that, that was what led to Nigeria's Vision 2020. People don't remember that. So right from the beginning, in fact, I would say since 2005, the BRICS had been of interest to Nigeria. All right. Now, October 2024, Nigeria became a partner country. And that was after 4 African countries had been established as members, or rather 3 of them, South Africa, Egypt, and of course, Ethiopia, became full members of BRICS. So if you look at that, what it now means is that if we consider our position as Nigeria, are we still going to be talking about the grammar of what we knew in the 1970s as the non-alignment movement then, or be talking today about our own national interest, which is to say, like, Ayo said earlier on, Nigeria must first and foremost consider her own interest before we talk about balancing relationships. So which means it is the best we get in terms of offer that Nigeria should pick up from the table. It's an interdependent world. And so we must also realize this. We need the world needs us. And that applies to every country around the world. Even the largest economy in the world, the US economy, is the reality of the life today. So in my own thinking, there is a good opportunity for Nigeria to also take interest and be involved in what is happening with Brics.
But get involved how? Because then you have President Trump's threats hanging down the throat of any country that's involved.
Well, for me, President Trump's threat is not new. Okay? Number one was that he said all these things when he was campaigning for that office. And then when he won the election, became sworn in as the president of the United States of America, he also announced it. And I'm going to slap tariffs on every country around the world. If at that time he said minimum is 10%, every country in the world. But when he came out with it, of course, we saw discriminations here and there. And ultimately, we got to a point where he now said, okay, like I mentioned earlier on, he backtracked a little. And I said, okay, I will go the way of bilateral discussion and negotiation of the tariffs, which is what they have been doing. Now, for him, he thinks the BRICS will become more important. Of course, today, the BRICS account for 39% of global GDP. That may appear insignificant to some analysts, but that is a big deal. If you look at the number of countries involved, 11 of them accounting for 39% of global GDP. That's somewhat significant. Now, the other side is the population of the world. What percentage do they account for? Almost 50%. All right? So that makes them important. So all that I see Trump trying to do now is to break the ranks. So let me bring forth these threats. And so for countries like Nigeria, who are not full members, but partner countries by designation, maybe that would make them draw back a little. But of course, like I said earlier on, it is about our interest and then the direction of trade. So every country, therefore, will look back and say, how do we respond to this? He did the same thing for the US, for example, because it's driving now de-globalization in the sense that American companies that are doing business in the rest of the world, he now also mandated them that they will prefer to produce their products within the US territory. So he is pursuing American interest, and that shouldn't make us also abandon our interest. And that is why, in my own view, Nigeria is not in any, so to say, risk that cannot be managed.
That's an interesting way to capture it. I was hoping, you would go one way or the other, but I mean, I think you have diplomatically captured it to say Nigeria is not in any risk that cannot be managed. So whichever way we want to go, we can manage it.
Correct, exactly. That's just the way it is. And that's the essence of strategy, like I said.
Okay, so we see BRICS saying, AU, African Union, promising that they are going to come, as a bloc with one front, and they have in front of them the AFCFTA. Internally, as Africa, we are still struggling with AFCFTA. We know that, even though we seem to have a lot of conversations these days. I mean, you talk about the issue of documentation and all of that. Yesterday, I spoke with a guest, and he still brought that up. So how successful, or how can we make this successful, coming out as a bloc and selling AFCFTA amidst BRICS and amidst the global trade uncertainty?
Yeah, fantastic question for me. Now, if you look at the trade agreement, African Continental Free Trade Agreement, what it says essentially is that let's look at other regions of the world, okay? 6 of them. When you look at the intra-regional trade taking place in most the other regions of the world, perhaps only for Oceania is where the volume of trade is a little lower than that of intra-Africa. So we have a very good case to pursue after, but also put in context here that after it became operational in January 2021, so between then and now, we've counted 4 years plus, about 4.5 years. The question is, how have we gone between January 21 and end of June 25. So clearly, Africa is going in the right direction. And the only way to deepen that is for us to come together and speak with one voice in relating with the rest of the world, on the one hand, and also build trust and confidence that enables us to trade more with one another. That means that the borderless Africa we are talking about within must become a reality that every government in the AU in Africa we want to pursue vigorously. And the whole idea is that if you don't fight for your own, an outsider cannot come to fight on your behalf. So for me, therefore, the critical element, and this is the last thing I will say about this question, the critical element is those conditions and terms of engagement between African countries. We must ensure they are African in nature, not a handout or something we copy from other regions. And that is what I've learned in my professional experience. That when you invite people extra Africa to come set terms and conditions for how you relate with each other, definitely it can be your best interest. So that is an area we need to work on to ensure that we build that trust and confidence within and among ourselves.
It does sound like we still have some internal work to do on AFCFTA before we can confidently present it, or use it as a negotiating instrument, whether it's to the US or to Brics.
That's right. That's my view and opinion. Just similar to what we have been talking about in ECOWAS in the last 50 years. The terms and conditions of forming that bloc were set by extra-African institutions, I will put it as that without naming any particular one. So you then find that it's been difficult for West African countries to meet those terms and conditions. So the bloc has remained a dream in the last 50 years. So the same thing we apply to AU, which is must look inwards and build that trust among ourselves so that we can have one strong voice in negotiating with the rest of the world, no matter the bloc we are talking about, whether Western or Brics or whichever.
All right. Thank you so much, Dr. Biodun Adedikpe, Chief Consultant, B. Adedikpe Associates Limited. Thank you for your time and views this morning.
It's always a pleasure conversing with you. Thank you very much.
Thank you, sir. All right, let's take a break. When we come back, we head to the commodity space with Halima. She's here in the studio. Please stay with us. Welcome back. Still Business Morning right here on Channels Television. Let's head to the commodity space now, and we have analyst with financial derivatives company Halima Adedikpe right here in the studio. Halima, good to see you in the studio.
Thanks for having me.
I learned your journey here wasn't that easy. What happened on the road?
Okay, there was a bit of gridlock along this bridge. I forgot the
Kara
name.
Bridge.
Yeah, the Kara Bridge.
Oh, okay. So, but I mean,
it wasn't that heavy actually.
Okay. Because we have new pump price now. So the road should be free, and transport should have, reduced.
Okay, so recently we see that there was deregulation, and this change in the PMS price is not a news. Actually, it is expected because we know that it will be reviewed per the global price changes. And so what we are seeing is that
so this is not Dangote doing it. This is following global trend.
Okay, it could be in two ways. Let's put it that way. Domestic production is ramping up, is increasing, so it could help what we'll be looking at in terms of price, domestic price for PMS. That's on one side, and on the other side is the global price that is trending downwards too, which is positive for the PMS price. But if we look at the diesel price, we'll see that it's sticky downwards. And why that is currently happening is because PMS is a bit price elastic, given that households use it more, small businesses use it more. And if I feel, okay, this PMS price is too high for me, I could reduce what I'll buy as an household. I can say, okay, I'm not taking my car out for this period, I'll take public transport. So it reduces what I will buy So producers are more tilted to adjusting the price of PMS to the reality of the global price. And also it is political sensitive, because people feel, okay, there's deregulation. So why are we not seeing what is happening, reflecting in the domestic space? That being said, if we look at the price of goods and services, we'll see that it doesn't go in tandem with what the PMS price is saying. And why that is because investors or producers are still doing wait and see. Let's see whether this decline will be sustainable before we could shift our price. That is one thing that is affecting it. And so it will remain like that for a while until we see a downward trend over a period of time. So
and now that OPEC Plus is increasing supply, it looks like we may have further drop in the price. I mean, it was initially 411,000.
Yes,
now it's about 500,000. So that means a more supply, less price.
We cannot look at it in that angle alone, because when it comes to crude oil, the Middle East has a upper hand in terms of oil reserves, in terms of oil production, and because we'll see that the crisis has been up and down, it will be intense today, it will douse tomorrow. So given that OPEC is trying to increase supply, fine. The non-OPEC price too are tilting towards more supply. But people, traders, investors are more concerned about what is happening in the Middle East. And so that is giving the Brent price a stability in the range of $67 to $69 per barrel. So they are more concerned about what is happening, what is going to happen in the global space, much more than the supply side of the OPEC and non-OPEC price. So
and you know, Halima, I noticed, you know, the difference between Brent and WTI used to be about $4. They're getting really close these days.
Really close, because there are several uncertainties, and
it seems it's coming from the U.S. because WTI is from the U.S. And that's why it's bringing it closer to Brent.
And the trade deals, the trade agreement is being squeezed. There is decline in what used to be the global economy, and so demand in terms of energy, demand in terms of products is squeezing out. So we are not really seeing the situation as it used to be before now, that okay, this is what we expect in the next 3 months, this is what we expect in the next 2. So the uncertainty in the global space generally is driving those prices
closer to
themselves. Yes.
Well, another thing is, while we see this trending down, the price of petrol at the pump, we still have to wait for a bit before we see it driving to transport fare and food items and all of that.
Exactly.
I know Mr. Ruwani said we should wait till about September.
Yes. You know why? You know, when we look at, I mentioned the local production. When we look at Dangote, it is heavily investing in the downstream sector, and which would translate to increase in supply of PMS, even for Nigeria, before it's been transported or sold to other regions, which is the company might feel they need to transport to. So that in itself will ease out the supply concern for Nigeria, meaning there is certitude, there is stability in terms of I need PMS for my SME, I can get it. I need for my car, I can get it. So that certainty it will be there. But if it is now for a longer period, then it will translate to decline in prices of goods and services. But for now, there will still be like a wait and see for investors, for traders, to be sure that the prices are really sustainable.
So talking about the Naira, we saw a depreciation in the parallel market, even though it was flat in the official market. I think I saw some numbers yesterday of the intervention of central bank in the market this year for the first half. I've forgotten the number right now, but you know, can we say that the Naira is stable now without the intervention of the CBN? Or there's no way we can survive?
We cannot take that, we cannot rule that out. In fact, let's say the numbers for June in terms of investment inflow looked good. So that could be a factor. Another factor is the CBN intervention. Though they recently said it will be reduced compared to what it used to be, but there is still some hints as to will still be there. So which is giving the market a kind of, okay, the CBN is still there to intervene as at when due. So that being said, if we look at what is it called, the pressure in terms of demand too, in the black markets, in the parallel markets, what we got from our survey is that the demand pressure has reduced a bit compared to what it used to be. So relatively to like 6, 7, 4 months ago, the demand pressure is not as high as it used to be.
So where has it gone to? Has it gone to the official market, or there's a reduction in demand generally?
There's a reduction in demand. So it's kind of affect what the appreciation and the stability we are seeing right now. So we can't tell if it will increase, because people will start stocking up for what is it called, the third quarter towards the fourth quarter, school fees and all. So we cannot tell whether it will, but for now it is sustained, and it's a good one for Nigeria because, one, it gives investors better outlook in terms of planning, in terms of restocking, in terms of new orders and hiring. So it helps to give them a kind of positive outlook to what it could look like. So I think it's a good one for Nigeria.
And then, I don't know if we should even talk about this, the rebased GDP we have been expecting since last year. We are told that we may have it on Friday.
On Friday.
I don't know, but FDC, I know you people talk closely.
Yes.
I don't know how certain it is, but you know, it will really be nice to get this GDP. Because, as somebody said, we talk about inflation and all of that, but we don't really know the status of the economy. So if we don't have a GDP number, then
it's giving an opaque picture.
Yeah.
So for GDP rebasing is a welcome development, because it's supposed to be done even every 5 years. I think the last one we did was in 2014. And the GDP really increased. Even it was the highest in Africa, much more than South Africa.
Yeah, that's what made us the biggest economy then.
Because it was inclusive of the expanded sectors, and so many underrepresented sectors too were included. And so that made it look
will
good.
Be included in this
one. Now. So we
discovered sectors.
So yes, we could be expecting like a double of what we are doing right now, because it will be more all-encompassing compared to what it used to be. But beyond that, we still need to look at the credibility of our data and the framework. It is supposed to be what should be done every 5 years, and it shouldn't be delayed, because there are so many eyebrows regards our inflation number, as regards our unemployment. So the delay...
I don't think we even have an unemployment number anymore.
We do have, actually, but people are not reckoning with it. Markets are not reckoning with it.
How can you say our unemployment in Nigeria is 4%?
So we need to do better in terms of data integrity and the framework itself, so that at least the market will be certain that the data is representing the actual situation we are in, so that it will help in terms of investment inflow, it will help in terms of employment, it will help in terms of decision making for not only household, but even people that feel like, okay, let me go into Nigeria to invest or do some things that has to do with their economic advantage.
FDC, please help us tell MDS.
We are all waiting. July 9.
No, they said 11.
11, sorry. So July 11.
So we're counting down. If we get it this time around,
hopefully.
We'll keep our fingers crossed. Finally, let's see what's happening. What's happening with domestic commodities?
Okay, for domestic commodities, it's a mixed situation right now. We are seeing that some prices are creeping up again, and while some prices stayed flat. For instance, I think pepper went up, and I think beans too. So, but beyond logistics, I think it's an issue of supply chain or availability of those products. it is.
It's still planting season.
Yes, so we cannot tell whether it is beans planting season, but I'm sure pepper is in season currently. But the price is not reflecting the harvest period as it used to be in the.
Oh, because of logistics.
It's
Or is it
part
because
of
of insecurity? Insecurity is also
insecurity, logistics, and then people are leaving their farmlands and they are shifting to the, maybe let's say the what is it called now, the city, to look for a better option instead of risking their lives, and at the end of the day not getting what is expected to be gotten after harvest. So they feel insecurity and all is really affected. So it's a mixed situation right now. So that is what we're seeing.
I wonder when insecurity will not be a problem or a conversation or a topic.
We are hoping to see that period. Yeah, in Nigeria.
We sure hope for that. Thank you so much, Halima Dedino, analyst with Financial Derivatives Company. Thank you for sharing your time with us.
Thank you for having me.
All right, let's take a break now. When we come back, we head to the global space right here on Business Morning. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. Let's head to the global space with Will Ibon. Will.
Good morning, Amy.
Good morning.
Yeah, have you been hit with the latest new tariffs from Trump? I see you've been trying to push it around, ask Halima to take some of it, but I don't worry. I will help you push it back.
I'll give you the bulk of it.
You take the bulk of it.
I'll give you the
No,
bulk of it.
I'm pushing it back.
Because you're President Trump's friend.
I am pushing it back to him. I'm calling him right away. I'm telling him, please take your tariffs. And you know, Nigeria now we're affected with that 10% extra because of Brics.
No, but we are not members of Brics yet.
Well,
so we're just partners. Our president has gone there as a visitor. Even though the AU is saying we'll come as one front, but I mean, Dr. Adenike had said
we can manage any situation.
Yeah, and if we put our house in order,
strategy.
Even the U.S. cannot stand on its own.
True.
U.S. need partners. So
True.
if we present a coordinated front, and as somebody said, we follow through social, we know what President Trump will say, then we will know how to handle it.
But the fact is that any country aligning with anti-American, policies.
Yeah, don't forget it was supposed to be July 9, but now August 1st.
So
don't worry about that.
Okay, we'll see about it. But you know that we all know U.S. President Donald Trump set a new date, that's a new deadline for the tariffs, August the 1st, and new tariffs rates were also announced, and he warned Japan of a 25% tariff, 30% for South Africa, and others as high as 40%. Now, Japan and South Korea say they will continue negotiations with the United States ahead of August the 1st tariff deadline set by President Donald Trump. Japan's Prime Minister Shigeru Ishiba, who said the latest tariff announcement was truly regrettable, confirmed talks are ongoing to secure a mutually beneficial deal. South Korea's President Lee Jae-myung also views the new date as a grace period to avoid a 25% tariff. Seoul says it will intensify discussions and will also use the time to reform domestic trade rules to address U.S. concerns. Now, China is cautioning the U.S. against reigniting trade tensions as Trump tariff deadline nears. In a People's Daily editorial, Beijing labeled the U.S. approach bullying and urged cooperation over confrontation. It also warned of retaliation against nations that cut China out of supply chains through U.S. trade deals. Bangladesh will hold trade talks with the U.S. next week to seek relief from a new 35% tariff on its exports. Commerce advisor Bashir Uddin says Dhaka is pushing for a win-win deal to avoid further economic impact. The talks come ahead of an August the 1st deadline set by President Trump for countries without bilateral agreements. The EU says it hopes to reach a trade deal with the U.S. this week after securing a 3-week extension to avoid new tariffs. Ireland's Deputy Prime Minister Simon Harris confirmed the bloc as until August the 1st, offering a 10% base tariff for relief on cars, steel, wine, and medical devices. He warned uncertainty remains, particularly over potential tariffs on pharmaceuticals. Still in Europe, German exports to the U.S. fell 7.7% in May, reversing gains from earlier stockpiling ahead of U.S. tariffs. Year-on-year exports dropped 13.8%, official data is showing. Overall, exports declined 1.4%, with shipments to China down 2.9%, while exports to the UK rose 15.1%. Analysts say the earlier boost was short-lived, warning of ongoing pressure from a stronger euro and renewed U.S. tariff risks. British Petroleum has signed an agreement with Libya's National Oil Corporation to assess the revival of two major oil fields. The move signals BP's shift back to fossil fuels as it steers away from its earlier low-carbon energy strategy. Seems a lot of countries are beginning to go back to fossil fuels. Now, Hungary's inflation rose to 4.6% in June, driven by higher food, energy, and service costs. Despite government curbs, it's the highest rate since March, according to the National Statistics Office. Prices rose 0.1% from the previous month, the Budapest-based Statistics Office said on Tuesday. Now, still talking about inflation, we see Australia's central bank keeping its key rate steady at 3.85%, surprising markets expecting a cut. The Reserve Bank said it needs more data to confirm inflation is easing sustainably, despite recent CPI figures showing cooling prices. Treasurer Jim Chalmers called the decision disappointing as the economy faces weak growth and cost of living pressures. Economists now expect a rate cut in August. Now we'll move from there to Samsung Electronics, which has a forecast a 56% drop in second quarter profit, hit by weak demand and delays in securing AI chip deals with NVIDIA. Operating profit is estimated at 4.6 trillion won, far below analyst expectations, while revenue is projected at 74 trillion won. Samsung cites U.S. restrictions on advanced chip exports to China and slow progress in high bandwidth memory chips. It also faces fierce competition from SK Hynix and TSMC. Now move from there to fast fashion giant Shein, which has confidently filed for an IPO in Hong Kong. The move is seen as a tactic to pressure UK regulators after long delays in its London listing bid. Shein filed a draft prospectus with the Hong Kong Exchange and sought approval from Chinese authorities. The company previously shifted plans from New York to London amid scrutiny over forced labor allegations, which it denies. And those are the highlights from the global space today. Hoping tomorrow will bring more news, but hopefully Trump will be in it. Hopefully.
I wonder how possible that is.
Well, you know Donald Trump dominates the news, but I'm hoping that
Exactly.
Truth Social will not be ablaze tonight or this evening. We're expecting more from probably EU. I'm actually very surprised that the leaders, the governments of these countries are not thinking of ways to say, okay, the US, you want to be American, you want to be America only, let's try and do something that will be just our countries only, protectionist, stance. But right now, everyone is running to Donald Trump to seek, a deal. What does that leave the US? Making them feel like the giant of the world.
But the reality is no country can actually survive on its own. And because these countries have been intertwined for decades, so it isn't easy, even for the U.S., to just let go, of exporters, or even sometimes it's the labor. For instance, as much as President Trump is not very happy with China, he cannot just let them go. He had to make some compromises because most of the products are made in China and then being imported into the U.S.
But we see the shift now that many companies are now moving possibly to India to, for production now based on threats from Donald Trump. And if this happens, China is losing that ground as the hub of manufacturing, chip manufacturing for that matter. And if India takes over, so where does that leave China?
And then tomorrow the U.S. is at loggerheads with
India.
So, at the end of the day, you need to relate to a country. You need to, not just a country, because the world has become a global village. So everybody needs everybody. You just have to develop yourself enough to have something to offer, which is the conversation we're having in Africa. Let's develop our resources. So when we're going to the negotiating table,
we have something
of
solid.
value
Yes.
to offer. And so we are not looked down on and always on the receiving end.
I was going to bring that up, you know, your discussion with Mr. Dr. Adedipe when he talked about, when you asked him the question about AFCFTA and how we can, you know, leverage that to actually work, make it a success. How can we actually make it a success?
Yeah.
And I was thinking, yes, that's the question we should be having. Not a lot of talk, but a lot of work. You know, we have talk shops. The workshops should actually start bringing out the actions, because if we have, what you say, a united front and something of value, I don't think we'll be on the...
We kicked around like that.
Yes, kicked around.
All right, Will, thank you so much. All right, just before we go, I'll tell you that yesterday the market hit a new high intraday and sustained that at the close of trade. It closed at 121,295.33, gained 0.31% for the all share, and the market cap is sustaining the 76 trillion naira level. It gained yesterday 192.85 billion naira into the purse of investors at the close of trade. Activity was mostly in the red, but we saw deals positive, more than 24,000. A lot of deals took place yesterday. Top gainers yesterday were Triple LG, Ella Lakes, and Upcredit. They gained 10%. Three of them as the top gainers. That's the maximum any share can gain in its single trading session, 10%. Then the top losers were Assurance, Assurance, RT, Briscoe, and Prestige Insurance. So we saw Insurance did so well last week, and they had good numbers at the close of the trade, the week's trade, and then we see a bit of a profit taking also coming on there. Top trades, Universal Insurance, FCMB, and Japol Gold sustaining its place. That's Japol Gold from last week. So hopefully when Will comes at 1 p.m. with intraday numbers, perhaps would have gotten to 122. Yeah, well, that's a possibility if investors will move along that line. But anyway, so we'll bring you that and a whole lot more 1 p.m. during Business Incorporated. I'll be back with Will Ebong. I'm Ini John Mekwa. Talk to you later.